Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, since last week, the Australian dollar has come under significant downward pressure after some initial economic data from China added to the weakness and a surge also in the US dollar. Last week, many central banks are hiking their rates. However, the People's Bank of China eased its medium-term lending facility by cutting 10 basis points from 2.85 to 2.75. Meanwhile, the market's opinion about the path that the policy for the RBA will probably continue and expects another 50 basis point rate hike in September, with the broader view that the cash rate could be above 3% by the end of 2022. Looking at the current pattern, the Australian dollar has found initial support at 68.60 after posting an intraday low of 67 and 57.58 on Friday. From the market's recent rebound, I do anticipate we should see a challenge of 69.15. A break there would give further scope up towards 69.55 and reassess from there. The euro still maintains a bearish pattern as it plunges closer towards parity, or at least towards 99, 50, 80, the initial objective, due to the break of 101.15.35 last week. Looking at the current pattern, we are oversold. However, the ADX is trending to a bear case. Meanwhile, all eyes turn to this year's Jackson Hole Symposium in the state of Wyoming, which expects to see US Federal Reserve Chairman Jerome Powell give a speech, which could give some clues on how the central bank may signal a 75 basis point interest rate hike in their next meeting on September 21, or whether it may ease its pace of rate hikes and increase by just 50 basis points. This year's topic is reassessing constraints on the economic and policy. This year's symposium marks the first in-person Jackson Hole conference since 2019. Regarding the data, the August US jobs report will be released on September the 2nd. Along with that, inflation will be released on the 13th of September and then followed by the US Fed rate decision on the 21st. So we do have a little bit of information to come before reassessing, or at least assessing, that is, the expected rate hike. Looking at the euro, as I mentioned, we're heading towards parity and looking towards this level of 99.50.80 as the US dollar, which measures the greenback strength against a basket of 6 major currencies, rallies to 108.12 this morning. Looking at the market, though, we are oversold and maybe see a rebound off this support here, so I'm not going to get negative as we get closer towards this region, as we did see a strong bounce and could again. And also keeping an eye on the dollar index, as it's currently, or potentially, maybe seeing a head and shoulders pattern forming. So keep an eye on that. The dollar yen, well, the market surged higher and now near enough at claiming the level around 137.30.50 as we get a fresh high of 42. In light of this pattern, we are overbought. But we did see a little bit of an extension last time we were overbought. One spike up, some bearish divergence come in, and the market turned around. So I have a feeling that we might see a little bit more Japanese yen weakness and maybe just pop through this level around 137.5. But keep an eye on this indicator because it's overbought. And if we do see a little bit of divergence, no doubt the pattern will be repeated again as we saw in early July, and see a rejection and see a pullback towards 136.30. The sterling tumbled heavily on Friday, and from that, the market is still digesting the recent UK economic data that was released on the CPI, which surged to a 40-year high of 10.1 in July. In light of the pattern, we are extremely oversold, and therefore could see a rebound anywhere from 117.20 to 117.70, and therefore look back towards 119.20 as a potential target. Gold still remains weak as it heads lower towards an objective of 1,732 to 36. The break of 1,755, along with that close of New York beneath this level, has reaffirmed or supported the downward case But we are a little bit oversold, so it may be a brief encounter towards the downside. Nevertheless, I feel before we get any bounce, we may reach this level and then followed by some profit taking. Wrapping up with oil, well, the market has survived the downward challenge so far of $86 a barrel. And from the current pattern, I am remaining supportive through a further rise with 40.60 to 92.70.90 as a potential target, and then reassess from there. Well, that wraps it for the start of the week. Thank you very much for joining me. As always, look out the Intraday Report, and I hope you enjoy the day.